So yesterday's review gave some interesting opportunities. Not really according to my system, but the overall price action did give some opportunities. So the more higher time frame. Okay, we're still in bullish territory, printing all-time high after all-time high. We have a previous day low here after FOMC. Price gave a really violent bullish reaction. There was a 4 hour balance price range. It was bearish. It got reclaimed yesterday during Asia session. So that means that new highs are back on the table. So it was already printing a new all-time high for NQ during Asia. Not really for ES, but I think that is just a matter of time. So let's just mark out all-time high here as well. So this was all-time high before the day, of course, the US session opened. Let's see, for NQ it was already tagged. So actually Asia session was here also new all-time high. So if we look at what price did create the new all-time high, sold off into this, what was it? I think 4 hour level. Yes, this was a 4 hour level. So I mark out the daily, the 4 hour and the hourly levels. ES only had an hourly level here, but it both coincided with Asia low. So in the end, I think if I would look at the draw, or at least the entire move, then we could expect some reaction ultimately back to EQ of this move, which would also be the case for ES. Let's not go too specific. So overall, I'm looking, okay, we had a violent move up, and just like what happened in the last few weeks, there's not much rebalancing going on, except for a move like this. Like this is a good rebalance for price. So ultimately, I'm looking for shorts, but I want to be picky because there are many bullish gaps supporting price at the moment. So it's also about looking at, hey, what is price doing? And during London, so this is for just before 8:30 red folder news, it was unemployment claims. I think it was pretty much, it was rather bullish than bearish. So I also want to see, hey, how is price reacting to such events, taking into account the context. But what I already noticed, and that's mostly in hindsight, because I also mentioned that during the price itself, I was not really aware. So we have a couple of things going on. We have a bullish S&T. Let's mark it green, because price was just printing lower lows for ES. But at the same time, then of course we also have a bearish S&T, because it was just more or less moving into a how do you call this? An ascending wedge, I think they call this. I'm not so much a pattern trader, but in a sense that I trade patterns as they come. So we have two SMTs or divergences going on. And if I go to the 5 minute and just look at what price was doing, so I'm mostly interested in, hey, what is the candle we get at 8:30? So this was 8:30 candle, and it printed London high. I think the candle itself was not too exciting, so this was the candle and then it sold off. So for me it was interesting to think, okay, so we have good news in a bullish context, but we sell off. So that means, in my opinion, that price tends to rebalance to the data wick high. So this is not only London high, but it's also data wick high. So I was watching price and just interested in looking for longs. So I thought, okay, this is an interesting gap. So I look at gaps 6 points or larger, which is not this. So I don't trade this. Then I do look at the 2 minute to see if there are better opportunities. So this is a gap I cannot work with, especially also seeing the RR. And price was just chopping about. and I was just looking. Okay, so we still do have a bullish SMT going on because ES was printing lower lows and this one was still printing higher lows. And I think on the 1 minute there was a potential for a trade. No, not here, but I think here it did create an opportunity. I'm not entirely sure. In the end it didn't work out. No, actually it just sold off. And why was this? Oh yeah, so I was not paying attention because I'm you know, I watch price action the whole time, but I do forget. I was watching price action. I was thinking, okay, so we sell off here and we take out these lows. So on a more higher time frame, we create a change in the state. So this is my change in the state, and we are more or less filling the entire 1 hour gap. So for me, London low is now drawn liquidity, and it might not go there in one move, so we might see a move up. Actually, I think the 1 hour already got, so we have a 1 hour here as well, and it already got fully filled. And Asia low was already tagged for ES. And that's of course because we do replay, and the replay is already filling the entire candle. So this is my 15-minute change in the state. And what do we have more? We also have a breaker. So we have this move down, move up, breakdown, and then the retest. So I could mark this level out as a breaker. And I think now I want to see this level hold, H1, because it got mitigated, this entire 1 hour level. But seeing the weight of ES, I think the question is NQ going to... So at this point in time, I could still assume, seeing that price was just reached new all-time highs, I could assume that NQ was the stronger of the two, pulling price up of ES. But the moment this broke down, it was obvious for me that this bullish S&T was not holding any relevance. We broke down, we actually got below all-time high, and we were on our way to this H1 level to Asia lows. And NQ was of course lagging because it was the stronger pair, while ES was already showing a lot of weakness. So the bearish S&T is now, let's say, the dominant divergence of the two. However, I was not paying attention because I was too bullish biased focused, I think, because I was thinking, okay, so now we're generating liquidity, we'd sell off, we probably find a bottom, and then we might get a reversal to the upside, which itself, of course, is what price does. But the question is, what's the context, or what is the more higher time frame bias that I should have? So let's say on a H4 or on a daily, I could assume that price is still going to move up, but on a 1 hour or 50 minute, it seems as if a correction is more probable. So price stalls here, and I think it went up from here. And what I was not paying any attention to was the consolidation here, because generally you want to see price just, if it consolidates, you want to see a continuation to the downside. But price was now, because this was US Open, it was now moving back up. And now this for me is interesting, because what I did not do, and because I wrote down in my journal, especially when the US Open is there, please move to the 15 minutes, because the 15 minutes has clearer, more higher time frame levels to draw the picture, to draw context, to understand what price is actually doing. And I did not mark out this 15-minute change in the state, because if I would do that, it would make so much more sense. And why? Because what actually happens is that a lot of confluences came together in this block of price action. So this is three hours of price action. But what I also saw is that we have this 15-minute fair value gap. So you have to understand this is hindsight, because I was watching it while this moved down. So we had this tap into this level and then it was selling off. So now I know, okay, this H1 level has lost its relevance because ES was just barely holding on here, just above this Asia low, near this liquidity. So I was thinking, okay, I don't see any reason for price to move up. It got liquidity here, it broke down, and here we have these. So I'll move the H1. For me now it's a done deal, right? It's not going to hold or provide any proper support anymore. But here three things come together which are actually part of my model. But normally I trade this on the 1 minute, the 2 minute, 3 minute, 4 minute or 5 minute. And this is actually a perfect setup for on the 15 minutes. So we have a bearish S&T, we have a drop, we have a 15-minute fair value gap, which was mitigated, it was reclaimed. So we have a sweep, even we have two sweeps, because you can also see this as a sweep. If I have the checklist available, then I'm going to see, okay, do I have a sweep? And then normally I would like to see a sweep of like a high time frame level, not a lower time frame, but this is all-time high, so I would mark it as yes. There's no FUG. There is a SMT, so that's a good one. There's no EQ of the move because we're all-time high. And do we have a clear draw on liquidity? Yes, we do have it, but it's not that obvious. So I wouldn't mark this as, like, say, if you have the LR, low resistance liquidity run. We do have a very good IFVG. It is not a BPR. But do we have lower time frame SMT as well? Then I would mark this as yes, because that's actually what it is. Do we have clean PA on the 50 minute? Yes, it's clean. We have a breaker change in the state. And does it align with macro? It does, actually. So we have a really good setup on the 15 minutes. So this is for me a good reflection on to see that even though my attention normally goes out to the really lower time frame, when you have volatility and the setup actually takes place on a 15-minute level, then especially with the volatility that we currently have, even though it's a 15-minute setup, it doesn't need to take 6 or 7 candles to form, because as you can see, the setup builds up on a 15-minute, but it's actually concluded within 1 or 2 50-minute candles, which I think is awesome. So this is my checklist. I preferably have a really high time frame sweep, let's say a daily level or a 4-hour level at least. And everything that is added here is just adding to the higher time frame confluence or probability of the trade. But what I've noticed is that when the price action on the lower time frame is really good and it's showing me signs of proper reversal, this might actually be a better indicator of the trade working out, especially because the move that I need to get the 2R is relatively small. So the lower time frame will give me a better indication of the probability of the trade. Okay, so okay, the 15 minutes, let's just move to the 5 minutes, because then you can actually see the PA. So what do we have? We have a mitigation of the breaker, almost to the tick, as you can see. We have a piercing of the change in the state. So they were just wicks inside the change of the state, which I don't normally trade as a thing without having the other confluences as well. So we do have a tap into this 15 minute, while in this situation we do not create an SMT, because it also creates a high, but then it sells off immediately. And to show you how fast it sells off fast. So we have 5 minutes, Asia low is already being taken, and by almost the entire gap is being filled on this H1. And what you can see if you zoom out, that this level is not taken for MNQ, and Asia low is definitely not taken, because these equal lows were actually awesome draw on liquidity. So this is the trade, and you can go for a 2R. So you enter on the retest of the IFVG. And this was actually just top notch. You don't want to see the breaker like you could have a soft stop loss. But normally you can just put it here at the breaker, or maybe at this wick. But to be honest, then this wick also makes sense, and then this wick also makes sense. So then just put it at the top of the gap, which coincides with the breaker, which is very, very convenient. You trade the 2R, and that's actually coinciding with this gap. So you can trade this wick, but as I mentioned before, I always put it a few points up because that gives me a better chance to get proper exit. 2R trade, and the moment you see price chopping about here but not showing any strength, moving down, you could hold a runner to London low, which would provide you with a 3.5 for a remaining position. So because I trade live drawdown on Apex, which is honestly a pain in the ass, but in this phase of trading prop firms, it's the cheapest way for me to get funded accounts. So I'll take it as it is. Every prop firm has its own upsides and downsides, and this is one of the downsides of Apex. So what I do is I scale out along the way. So I'm not going to hold the entire position up to 2R or 3R, whatever. But I'm going to scale out. In this case, the 2R was also this perfect wick. That would actually be a better target, because this one was already taken, by the way, I see now. So I take it as much as I can, but I scale out either 75% minimum, maybe 80%, and depending on the contracts that I have, I would leave 1 or 2 contracts open to do the rest. And I think that would give proper return and proper R. So this is the trade, and yeah, for me actually seeing this, 1 pierce, and then you have 1, 2, 3 candles together. So that's a 15-minute trade based on a higher time frame setup. So for me, this is a very good lesson to not be too focused on the lower time frame, but also that you can take good trades off of a higher time frame setup and still get a result quickly.